Hello, hello, hello. Hope you guys had a fantastic Tuesday and SPAC Frenzy Tuesday. So today's video is about why QuantumScape went up by another 50% today and look into other SPACs I am buying into. So this is a SPAC Frenzy series and that's why I'm covering yesterday and last couple of days couple of SPACs. Disclaimer, this is not my advice to buy any of these stocks. This is just for fun and do your own research and I'll describe my position in each of the stock below. Before going ahead, please stop, take a minute and then click the like button, and also if the first time coming here, click on the subscribe button so that you don't miss a fantastic stock like QuantumScape next time. Okay, let's look into QuantumScape Corporation. As you see here, it's 30 plus another, you know, 15%, sorry, 25%, 24% after hours, close to 50%. So this price I cannot believe myself. Since before the merger, I purchased the Kensington Capital around $15 before the merger, and I cannot imagine buying the stock at $70. That is like 6x times compared to the price of initial Kensington Capital. So it's today, instead of buying stock at this price, I sold next year option puts. So the $50 put for a premium of $33, which brings my effective stock price again to $17. So I always say keep your average price below 40-50% the current price. That way, if stock crashes, because we have seen Hylian, Larsen Motors, so many SPACs, nobody can tell whether how long this will stay at $70 or $50 or $60, and we don't even know if it's a long term, right? This for sure I think long term, but still, you have to protect yourself. So instead of buying, $60 stock and doing covered calls, I thought this is a better option for me to go with this thing. So let us see if by next year, if the stock falls below $50, then I get assigned. Then I have to buy the stock at $50, but already I got premium of $33 today. So that puts the stock price that effectively at $17 for me. So this is a high flying stock. If you want to get into, but you don't want to buy at the price what they are saying, so you need to watch my video how to trade high flying stocks. I talk about options, covered calls, and also by selling puts for a long period of time. Okay, for a period that is ending next year or two. Okay, so let's get into actually why the QuantumScape basically flying like this. So can get its lithium metal solid state batteries to 80% fully charged in 15 minutes, and they showcase it today. That's the most important. They did a showcase of that. So that's the big news. Yeah. So if QuantumScape can scale up, so keep this in mind. This is still not commercially available. They have to scale this up, and it could take next 4 to 5 years. It means a typical EV battery can go under 20 to 300 miles within 15 minutes. Okay, so that should be fast enough to elevate range anxiety. Okay, let's look into details of the article why QuantumScape went that much today. So QuantumScape is hitting home run battery technology, stock source, Barron's article. So it's a home run. Let's understand, you guys understand what is home run. So basically what they are saying is, so what is the main reason why QuantumScape can achieve this, right? So obviously it's a lot of trade secrets. It's a breakthrough technology. The separator allows, so the company's flexible ceramic separator between the layers of solid state lithium, okay, lithium metal. So the regular batteries are lithium ion. This is a lithium metal, and the layers of lithium metal are separated by ceramic separator. So obviously the separator allows quantum's battery to withstand the automotive electric current load, because in order to charge that within 15 minutes, you have to pump electricity like crazy. So that is the reason, one of the, the technology they had, and how much amount of current they are pumping into, and also And also there is a lot to unpack here. Amps are the basic unit of electrical current or the flow of the electricity. Okay, so what they are saying is they showed this on a panel, and in the panel there are a couple of people there, including Volkswagen research head and also Tesla co-founder, and also Stan Whittingham, who won the Nobel Prize in chemistry for work on lithium ion batteries. So they're all impressed by what QuantumScape achieved, and that is the really driving factor for today's stock price up. So if you understand the technical details and if the value, literally there is no product close to QuantumScape, except the only competition in this kind of technology for QuantumScape is Tesla. So basically it's going to be a war between QuantumScape and Tesla. We have to see next couple of years if Tesla can go ahead beating QuantumScape or QuantumScape can go ahead. Okay. So last time when I compared the video, I compared between QuantumScape and Romeo. So Romeo doesn't have a solid state technology. And whereas Romeo technology is different, they still use lithium ion. So still 1x. But the thing is, they have very, very high density battery technology, and then they can use it for trucks and big vehicles. So it's not about charging, it's actually about the density of the battery which can hold so much electricity, so much power. So, but with momentum in QuantumScape, after post-merger, I think Romeo Power also can skyrocket. Not 6x, but at least 1x or 2x. So that's why I am heavily invested into Romeo Power and its warrants as well. So let's get into okay. So let's get into you saw the QuantumScape and battery technologies. So let's get into one thing that I was talking about yesterday, which is warrants. As you know, QuantumScape is at high flying. It's really risky to buy the stock at this price. Okay, so how do you the best way to get these SPACs is early, and especially the best way is to get warrants around $2. For example, I bought train acquisition warrants around $2 just 2 months ago after the merger announcements, and now it trades in $7, 50%. And this is today's charts for the same stock I am talking about here, train acquisition. So stock went up by 13% here, whereas the warrants went up by 26 plus 4%. So basically 30%. So almost 2.5 times the warrants went up. So okay, so what's next? Train went up by almost 3x, and QuantumScape went up by 7x, 6x. So do you want to buy the stock, or do you want to buy an early SPAC that is still at $10 level? So that is the reason why I'm investing today into another SPAC called Bill Foley. So let's look into Bill Foley, who is a billionaire, and he has a very high credibility and also is a value player. So Bill Foley, born in 1944, is an American businessman and former attorney specializing in financial services. So you can call him as the king of Fintech. So he is from Jacksonville, Florida. He is the chairman of Fidelity National Financial and Black Knight Financial Services. If you don't know those companies, search Google them. They are like anywhere between 10 to $30 billion companies. They are huge companies. And also is a Fidelity National Information Systems, FIS. Okay. So basically what he's getting into, he had a SPAC, and then he had an agreement right now to merge with Paysafe. Okay. The company name is merging with is called Paysafe. So the stock symbol for the Foley Acquisition Corp is BFT, and the warrants are BFT. So as you can see here, again, my point I'm stressing out here is the stock went up by 7 plus 4, 11%, whereas the warrants went up by 19, 20 plus 9%, 30%. So again, 3 times. So if you had bought the warrants around $2, it's already up by 50% yesterday. So let's get into what is Paysafe. If you have invested into any fintech firm or not, there are so many fintech firms. PayPal, Square, Shift4, and a lot of this FIS and these companies. So Paysafe Group, the online payments firm backed by Blackstone Group and CVC Capital, agreed to go public with the blank check firm called Billionaire Bill Foley. So this is $9 billion, which is one of the biggest SPACs so far, but there are much bigger SPACs than that before. So those bigger SPACs are not successful. So if you know Multiplan, which is $11 billion merger, and also United Wholesale Mortgage $16 billion mergers, they are much bigger than Paysafe. And I think both are kind of a failure because Multiplan went down by almost, you know, the stock is trading at $7 or $8 now, and United Wholesale Mortgage still trading at $10. So, but why I betting on this big SPAC Paysafe? Two reasons. Okay, so one is Bill Foley, the other one is Fintech. So these both Multiplan and United Wholesale Mortgage, which is a mortgage, which is a health plan. So both are in not hot sectors like fintech or EV. So that is why they never had the momentum. But a fintech may not be as big momentum as EV, but still it will have maybe 50% of the momentum as EV. Okay, so let's get into, so the parts of Paysafe, you can say they're competitors with PayPal and Square, and we will look into that quickly once I show the video from CNBC. So let's look into that video from CNBC.
Updating everybody on the latest SPAC news. And we do have real news this morning. In fact, one of the largest transactions that we've seen to date in the latest, let's call it SPAC Frenzy. This morning, it's Foley Transamine. That is a $1.5 billion SPAC, and there you can see it's doing quite well after the announcement of a deal this morning to buy a business. Well, actually roll it really, because Blackstone and CVC are the owners of this business. It is called Paysafe. And it is a $9 billion deal when you add in the roughly 8 pro forma net debt the company will have. 7.195 equity value. They're valuing EBITDA at about 16 times right now. But this is Bill Foley. And Jim, you know well, this guy has an incredible track record of creating value. Former CEO, now chairman of Fidelity National Financial, built the largest title insurance company. Remember, took Dun & Bradstreet private and public. Canai, his holding company, has done very well. They came up most recently in the CoreLogic thing, which I've been following. But in this deal, Blackstone and CVC are selling, but they're also rolling. So they're going to get, I think it's, what do we got? $2.323 billion is coming to them. But at the same time, they will own 45.7%. That's Blackstone, CVC, and any of the other shareholders of the company as it's currently constructed. They bought it a number of years ago. They built it. But Jim, what they really are excited about here is the gaming market. Sort of giving a person this gaming wallet, its payment services, and the ability, even if you're using different platforms, to keep everything in one place, I guess. Well, I don't fully understand it, but it's seen as a full, real growth opportunity on the growth in gaming, correct?
Okay, so here's the thing. All the different betting sites have different lines, okay? So you want to arbitrage the lines, you want to look at them, and you want to try to figure out, one's +6, it shouldn't be. There's just differentials, +6.5. You really want to see all the line. You want to see the MGM line. You want to see the DraftKings line. You want to see the line out of Barstool, Penn Nat. And that would be a fantastic device, David.
Yeah.
Fantastic for gamblers. Remember, gambling is legal.
Right.
Again.
Okay, so you get the idea. It's a fintech company led by a billionaire, Bill Foley, who had a vast experience in fintech and taking this to public. And this is a competitor for PayPal and Square. So that is the SPAC we are talking about here. So I can get into details, and there is a PowerPoint presentation already from these companies. I don't want to get into details. This is 40-page presentation, Bill Foley and other investors, and then how much each they are getting. I will add a link bottom, and is giving you the Bill Foley profile. and also Paysafe is highly attractive and scarce investment. Okay, so let's get into what they compete against with, right? So they're into market of um, 3.8 million users, and they are specifically into some sectors. We will look into it's a digital wallets, e-cash, and integrated processing. So they are into three sectors in a particular markets, including which is a sports and betting and sports betting. So highly developed. I'm just browsing here the investor presentation. Okay, so that's what they are showing: gaming, social media, property management, wellness. They are into this right now. Global footprint they have, volume, diversification by sectors, sustainability. Okay, so this is the most important point I want to show you here. So they are comparing Paysafe comparison versus peers. Okay, so Paysafe, PayPal, Nuvei also very big company. Shift for payments. This is another recent IPO. If you don't know or not, I invested this around $30, $35 few months back. Now it is around $60. Just to give you an idea, pretty happy with the performance. Just 50% in few months. So going back here, so they what they're comparing is Paysafe, PayPal, Nuvei, and also FSR Global Payments. So basically, we can also look at for details. We can also look at exactly what the numbers of this are. This is not my page. This I got it from a Reddit article. So Paysafe, PayPal, Square. So Square is around $95 billion market and $250 billion market cap. And right now, the estimation based on the IPO price of $13, it's a $9 billion. So the transaction volume is obviously you can see it's 1/10 of what PayPal is doing, and Square is in different market, not just payment processor. Okay, so this is a transaction volume, and then enterprise value they are saying Paysafe is better valued than PayPal, and also since Square is not profitable, they can't compare in this year. This is what most important thing is the EBITDA margins and then also revenue. So PayPal revenue is $20 billion, whereas Paysafe revenue is $1.3 billion. Okay, so the estimated is little bit up, going up, not too much, not 50% up or anything like that. The growth potential is there, but nothing like EV company. So again, here is $24 billion for PayPal. So the margins is where Paysafe is attractive. This is much more profitable than both PayPal and Square. So this is what is showing number one global leader in iGaming, Fortnite, Twitch, Spotify, and also digital wallets. So this is a quick comparison between you know fintech companies since Paysafe is going public, comparing them with PayPal and Square. Okay, so if you not had any stock in fintech, you are not diversified, and if you don't want to take a stock route or SPAC route, the best ETF around this is ARK ETF by symbol ARK Fintech Innovation ETF. So they had Square almost 12%, Mercado Libre, Zillow, PayPal, you name a lot of companies related to fintech, and also Pinterest companies that have related to payment processing. Alibaba Group also. That is the IPO you want to get into. It has almost 100% return in 1 year. Okay, so let's get into this is the ARK Fintech ETF I am talking about. If you don't want to get into risky, getting into the SPAC and getting into the other stocks, so you can get into this and get a decent return still. Okay, so I owned this ARK ETF for a long time, and it's around 100% return for last 1 year. And this is not as hot as ARK Genomic ETF, which had 200% return, or ARK KW ETF, but still a decent ETF in fintech. Okay, So I want to conclude where are we going with this? What I'm trying to say is, yes, QuantumScape has a breakout, and because they had a demo and they had a results from the testing of the battery, and everybody was had a aha moment. So QuantumScape, if closest competitor right now going public is Romeo Power. So let's see how Romeo Power does after the merger. Romeo Power already went up by 50% within last 1 or 2 weeks. So I think the SPAC frenzy will continue for rest of the December and next quarter. We don't want to really buy the stocks that already went up like 6 or 7 times. Since all of us have limited money, invest wisely. If you can invest into warrants early at a $1 or $2 or $3, you have best potential for 200 to 300% returns within a few months. Hope you liked the video. I hope you like the overview of why QuantumScape went up and why I like Paysafe. Please click the like button and subscribe. We'll see you soon in my next video. Thank you.